Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, last week definitely an explosive week for the markets. We had the FOMC statement, the European Central Bank, the UK elections, and also of course a resolution on the US and China trade tariffs. Actually, this worked out to be another great week for our gold trading. On Friday, banking 330 points, and we of course last week we saw gold prices break out to 1 month highs. Now, we mentioned this time of year is typically very lucrative for the precious metals, and don't take your eye off the ball at the moment. Do make sure you're capitalizing on these seasonal plays in the market. In fact, going into next week, it looks like Trump impeachment is looming, and this of course can provide some explosive moves for the precious metals, especially gold, with the safe haven bid likely a knock-on effect to the stock markets. And of course, we've seen a very significant result here with the UK election on Friday too. All of these providing some great opportunities at the moment in the financial market. So I hope you've had a great week, and let's go through the charts together and we'll talk you through what we're expecting now as we head into a fresh week. Firstly, let's get right into it and let's have a look at gold. So essentially, gold closed at $1,475 per ounce. I hope nobody FOMO'd in right at the top of the end of the range here. As we mentioned last week, you want to take advantage of these pullbacks back down to the lower end of the channels, particularly the lower end of the ranges that we've been discussing with you. And we had a nice tap last week back towards the 1460 zone. A lot of support coming in again, so we're getting higher lows, higher highs as well, and really it's very much the same as we go into this week. Really try to avoid to FOMO in to breakout moves on gold. You want to be capitalizing on pullbacks. So basically, going into next week, what I'm looking at is support again to be coming in between the 1465 to 1470 zone. Possibly we may tap down to 1460, but I think what we'll see is shallow retracements going into next week. And then ultimately, I am looking for a move back towards the upper end of this zone and taking out last week's high and getting a move back to that 1490 to 1495 area of resistance. So essentially, what we're looking to do this week is again potentially capitalize on the counter flow if we do get a pullback on gold at the beginning of the week. But many of these traders out there who've been waiting for these significant sell-offs in gold, who've been very bearish, talking about 1400 gold and so forth. I'm sure you've heard those analysts out there. So many traders just sitting on the sidelines waiting for their $1,400 per ounce level to get hit. You snooze and you lose here with gold. So over this period, normally it's a very strong seasonal play from mid-December onwards right the way through to January and February. Going into next week, we have 4 new positions on gold. All of those trades are in fact protected. We banked 330 points on Friday. We're going to let the rest of the trades run, but any pullbacks basically back towards the lower end of the trend channel, I'm looking to capitalize on that for a move higher in this way. Now, it is possible actually on the flip side of that what we could see is a breakout at the beginning of the week, in which case if we do break out at the beginning of the week, just watch out for resistance which will be coming in my opinion around that 1490 to 1495 handle. So if we were to get a breakout to that level, and if it was to happen earlier on in the week, which it may not do, then we may get a pullback later on in the week, as we've seen last week on Thursday and Friday. So just be mindful of that. Although I'm looking for those higher prices, it's either going to come at the beginning of the week and then we pull back later on in the week, or we very simply have the usual counter flow on Monday and then we break out to these levels later in the week. So that's really what we're looking at on gold at the moment. And then just break it down to a weekly chart. You can see very clearly, we've discussed this many times before, that on higher time frames as we go into that month of January, so we have a couple more weeks left of December here, but as we go into January, what you really want to capitalize on is the potential for a breakout of this much larger bull flag here on the weekly chart for gold. We've really been moving very well within these channels for quite some time since we put in the highs over the summer, and now we're gearing up for a potential breakout here as we head into the end of the year and into January and February, and you want to be able to capitalize on that. As I mentioned last week on the silver asset of the day report as well, silver, we've been accumulating additional positions around the $15.60 handle, and also basically sub $17. I do like these levels at the moment, but over this period, typically the gold silver ratio, it does favor gold over silver. Between now and the end of the year, I'm more in favor of building more positions on gold than silver, but I still like silver sub $17, ideally though around that 1660 handle. So going into next week, again, I'm looking at any retracements here for opportunities to add additional positions. We've done very well out of silver lately, and over the course of 2019 2019, but you always need to be patient. On silver, don't FOMO in at these highs here. Essentially, over the summer, you really want to avoid any time as it's starting to break out back towards the upper end of the channels here. That's the time not to be accumulating. It's at these levels where silver right now, the risk reward is very favorable to the upside for a move back towards that, well, essentially that $17 level, then $17.50, then $18, $18.50, and then ultimately the swing highs here at $19.60. At these levels, sub $17, I do like it, especially for a seasonal play. You're not going to suddenly see those levels get tapped within a week or two, but over this period from essentially mid-December right the way through to the end of February, silver typically is a very strong performer. If silver can break out of these channels that it's currently in at the moment, that's where silver can fly to the upside. Now, platinum was a fantastic example of a seasonal play. Very strong move that we had last week, over a 500-point move in just a couple of days here. This is another market that we identified to you tends to move very well over this time. And again, it's one of these markets that if you snooze, you lose. If you don't pay attention at this time of year, it can very quickly break out. Before you know it, you can't get in. You just have to FOMO in at high levels, and you don't want to do that. So with that said, platinum at the moment, $929. I actually quite like this if it does pull back a little bit further next week. My ideal zone for platinum would be a retest back towards $900. If you can get below $900, that would be perfect here, in my opinion, to start looking at building positions. So I want to see if platinum will pull back a bit further. It may not. It may just consolidate and continue to ramp up from here, but platinum is definitely on the radar. Palladium has been an absolute star here in terms of its performance. So overall, December so far up 5% this market, but overall it's broken out to all-time highs yet again. As I mentioned previously, we banked 1,740 points on this entire breakout to the upside. We've still continued to see it go a little bit higher, in fact, on Thursday and Friday there. We're actually not that too far away from the $2,000 level now. So Palladium has been a runaway move here over the last couple of weeks, but I'm anticipating other metals will start to really get in line with their usual seasonal plays now between mid-December right the way through to January and February. So I would absolutely have gold on the radar at the moment, and also silver as well for this time of year. Then moving over to crude oil. So we've continued to see crude oil ricochet between support and resistance throughout the last few days. It tapped $58 per barrel on the oil inventories last week, where we had a larger build than the markets were anticipating. However, you're seeing a lot of support come in at $58 per barrel. I am expecting range bound trade again going into next week. So essentially keeping within the 60 to 61 zone as resistance, and then coming back down towards the 58 level again. So I'm not expecting a full-on breakout at this time of year, but I am expecting more range-bound trade, more consolidation. We're not really seeing much follow-through on any of these breakouts. They break out, retrace, break out, retrace. So I do think we're just going to continue to ricochet. There are opportunities to trade both ways at the moment. Sell at resistance, buy at support, whilst it still remains very range-bound at the moment. So we just continue to see oil consolidate right now, and I would look at that as an opportunity just to trade the range yet again as we go into a fresh week. So with that of course has been the week ahead commodity report. I do wish you all good trading, and there is still an opportunity for you to join us at the Gold and Silver Club, really to make sure that you're able to capitalize over this period and have an edge in the markets, not just relying, for example, only on technical analysis, which is fine, but it's not enough to make you consistent in these market conditions. You need to make sure that you're looking at more than that, a research-driven approach where you're taking into account market sentiment, trade flow, retail traders' positions versus those of the hedge funds, the money managers. You want to marry that up, of course, with fundamentals, geopolitical news, cycles in the market, and seasonality. So this is where if you build upon all of these different research-driven approaches, and then you also include our in-house market intelligence, this will absolutely give you an edge versus using an outdated technical strategy which doesn't work in these market conditions. So with that, of course, if you would like to learn a research-driven approach to the markets, here's the opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You get access to real-time trade alerts, real-time trading research and market insights, as well as access to our private Members Academy website and access to support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.